10-year note yields open the week moving higher, today getting as high as 434 and falling about a quarter basis point shy of the February 23rd high that marks the year-to-date high. So we did see yields moving higher. We had stronger New York activity index that came out earlier this morning, as well as a stronger NAHB number. However, all the focus is really now shifting on to Wednesday's FOMC, where the potential for the Fed to possibly trim their dot plots from 3 down to 2 possible rate cuts in 2024. Now, that hasn't happened yet, but when we're looking at some of the expectations, we're seeing the potential for a June FOMC rate cut decline to about 50-50 odds. Recall that was sitting at about 100% not too long ago. So the market making a bit of a shift here since we had stronger than expected inflation data that came out last week. It has drove 10-year note yields higher, and today culminating in a 434 high, again, just a hair shy of the year-to-date high. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will notice that as vols opened up higher this morning and stayed higher, we saw volatility moving higher as well, likely not only because yields were higher, but also as a nod ahead of this week's FOMC meeting. Last, let's talk about what we have tomorrow. Tomorrow is Tuesday. We do get some housing data. We have a 20-year auction, but really all eyes are going to be focused on what the Fed might do on Wednesday, some position squaring and getting ahead of that. Ultimately, that's going to be the big part of the week, the big player, big event of the week, FOMC and the after FOMC press conference that the Fed chair will hold. So opening up the week, 10-year note yields moving higher, getting all the way back up to 434, just shy of the year-to-date high, ahead of tomorrow's housing, 20-year auction, as well as Wednesday's FOMC.